Paul, thanks for coming on and helping us take a look here and get the week started off on the right foot. Paul, let's dive right into it. The peso and the Canadian dollar are getting a bit of a lift this morning from word of an 11th hour deal. What are you hearing in terms of the latest?
The latest is the deal is a done deal. The sticking points with the milk industry is really what cleared the hurdle at the last hour. What was interesting in the currency markets, really looking closer at the Canadian dollar, that one gapped up and made it over the range that we've been seeing for a while, the 76 to 77.5 cent range. Now you're looking at 78, maybe 79 on the loonie. So it's finally broken out of its 2-3 month trading range here. Big positive. The dollar not reacting as much, but we saw some very good bids under the Canadian dollar coming into the midnight hour last night.
So, Paul, it's interesting that the dollar seems kind of limited. I'm curious. In theory, this would normally lift kind of all boats, right? One of these rising tides we talk about. But right now I'm noticing the dollar, which actually slightly positive. So I guess in theory that kind of points to some strength, not only in the Canadian, the peso, but also in the dollar, correct?
Yeah, it does. The underlying the dollar has been the good economic data. We got the rate hike last week. That's also been supported by the dollar. The dollar has been rallying over the last 2-3 days or so, been pretty strong. So we expect the dollar to be relatively strong here. It has been strong as we've been talking about all the trade issues. That's been the go-to currency. So now that you're seeing a resolution of some of these trade issues, we would expect the dollar maybe to be a little bit softer here as we get the other currencies to pick up some steam. So again, additional strength in the dollar we don't see too much of. Given the run that we've already had and that it has been the safe haven currency over the last 6 months or so.
Well, and also the fact that it's right back into that 95 level, which for the most part has definitely been a bit of an area for them to hold up above. But Paul, let's talk a little bit about some of the other currencies, because we had new 2018 lows in the overnight session in the yen, and the slide is really starting to attract some attention, something like 8 out of 10 days to the downside. Now, I imagine some of this is related to the indices and the new all-time highs. We have the NASDAQ in the overnight posted new all-time high, but is this some of this also trade-related possibly?
Yeah, it might be. Japan's, the economic numbers that were coming out overnight, the Tankan survey, was not that great. Their manufacturing sector a little slower. And the yen has been on a long slide, and it's gone most of the year. If you're looking at it from a ski slope perspective, it could be double black diamond type of decline here. And really, when you go back over the longer picture, there really doesn't look to be a lot of support unless you go back 3, 4, 5 years. But that's a little bit lower than where it is right now. So the yen is certainly under pressure. The bank is very easy monetary policy here. And a little bit of weaker economic data do not spell good things for the yen going forward.
Yeah, and for the most part, correct me if I'm wrong, Paul, but considering the dot plot and what we recently heard from Fed Chair Jerome Powell last week, I'd imagine that would only continue to add to some of the weakness in the yen relative to strength in the dollar.
Oh, absolutely. And that's, again, that's part of the reason why when we've talked about all the trade issues, the currency of choice has been the dollar, surprisingly enough. And when you look at the trade picture in the United States, it actually is a little bit worse than it was a year ago. So the stronger dollar has hurt our import market, and to a certain extent it's hurt our exports, making our trade picture a little bit worse and maybe giving more fuel to additional sanctions on China somewhere down the road.
Another one of the currencies that we've been watching, Paul, that's seen a fair amount of ups and downs has been the British pound related to Brexit, but there's also been some uncertainty in the UK related to Theresa May, her ability to maintain her position as Chancellor, and, well, also some of the economic data. But this is all going to come to focus again this week as the parties meet again to discuss May's Chequers plan. And, Paul, would you expect to see continued pressure on the pound and increased volatility while the complicated process unfolds?
I think so. And that's, the pound has been all over the place. It's trying to find its a good range. It's been in a little bit of one here. We saw a rally coming into last week. touched some key overhead resistance and has turned down from there. So again, we may see this thing range bound with probably some more downside pressure over the next couple of weeks. Again, as you mentioned, Brexit's a huge issue, especially more related to Europe than it is to the United States. But the pound, I think, is going to be under some pressure here. We're hearing from Mark Carney that they're a little bit closer to raising interest rates there than they are in Europe. So that may, again, give it a little bit of support, and part of the reason why the pound has been a little bit more range-bound than other currencies here, more than what you would expect given the Brexit talk.
You know, Paul, we touched on some of the individual currency stories that are creating movement within the price activity of each of these individuals, but ultimately we talk about currencies related to dollar price activity, and then we talk about dollar related to rates. We've seen a little bit of a disconnect between the dollar and rates recently. I mean, I'd imagine it all kind of factors into and sort of speaks to some of the individual stories and the influence that they're having on these currencies, and then ultimately the dollar, because we saw new rate highs in the TYX and the FVX as recent as a couple weeks ago, but the dollar continues, as we just said, struggling with this 95 level for the most part.
No, that's true. And like I said, with the comments that we've seen from Powell and where the dot plots are, we would expect to see interest rates a little bit higher, a little bit more supportive of the dollar. You know, we'd like to see the emerging market currencies pick up here. We've seen a little bit of a pickup from a lot of those currencies. Again, if the trade talk starts to move to the back burner a little bit, we would expect more international currencies to do well relative to the dollar and unwind a little bit of that strength that we've seen here recently as the currency of choice during the trade tariff talks.